Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 20th of May, 2011. As always, we're going to start out with a chart of the S&P cash. Closed today at 1333, basically down 10 points. Very volatile day. At one point, we were down just a little bit lower, but at the same time, about lunchtime New York, the market almost came back to basically a break even, but we entered at the lower end of the range, down 10 at 1333. So what's it all mean? Well, basically for the last, I believe this will be the third week in a row, our posture right now on equities in the indices, Dow, S&P, Russell, NASDAQ, is neutral to negative. Neutral to negative. Neutral meaning mostly in cash and or very tight stops. Negative would obviously be more of a bearish bias at this time. Now, the good news for the bulls is we're still above the 50-day moving average. Yesterday, we did close above 1340. 1340 was once support. Once you get under it, it becomes a ceiling, which is obviously resistance. We closed above that yesterday at 1343.60. So that was good. Today, obviously, we're below 1340 again. So essentially what I'm getting at is it looks better for the bulls if we get a close, let's say, above 1355, 1360 in this area. If that's the case, the odds increase that we're going to test the highs that we put in here over the last 2-3 years at around 1370. If we get through that, possibly we're going to see that 1420 area. However, I think if we break the lows that we put in on Tuesday of this week on the 17th, those lows were 1318, then I think we're going to 1300 to test that area. I also said last week that if we broke this area here, 1294, to me, that would be a signal to definitely exit any positions that look very similar to this and get short. For our purposes, we will increase our short position if we get a close above the low that we put in on Thursday of 1318, because to me that means the odds are that we're going to at least test 1300 and have some type of bounce there. Whether it's a dead cat bounce or not, we don't know. If again we get above the 1355, 1360 level, we'll look to put that cash to work on the long side. All right. Let's take a look also at, we can take a look at the Dow real quick on a daily chart. Again, this could just all be a pullback to go higher, but we have to take each signal with its due respect based on the move that we've had over the last 26, 27 months. Again, I'd want to see the candle hold here, which is right basically the low in this candle on the 50-day moving average as well. Otherwise, I think we're going to 12,250. Possibly to 12,000. I do think that we will see 1,200 sometime in 2011 on the S&P cash, the S&P 500. That's not to say that we won't go to 1,400, 1,428 in that area first. Let's take a look at gold. The good news for gold is it's still holding the 50-day moving average. It did break the trend line basically on Tuesday as well. Once you have a tight coil here or a tight trading range, usually the breakout or the breakdown is large. In this case, that happened today. Very nice move on GLD. If you're in it, I would definitely have my stop under the 50-day moving average or about 3 or 4 ticks under the low that we put in on Tuesday the 17th. That low was 143.42, 143.42. It's quite possible we'll be getting long this again, thinking that we're going to test 150. We get through 150, we're definitely going to test the old highs here. But again, if it all blows apart, tight percentage-wise, you'd want to have your stop just under that Tuesday low, the 17th of May. All right. As far as silver goes, we don't have a position in this right now, either long or short. This could be a bounce here. We could be carving out a bottom to maybe head up into that 3750 area. I do think that we're going to break this again though, this 3250. I prefer to see some strength here, weakness again, and then we will look to get probably long on the double short ZSL. All right. As far as bonds, IEF, we put out this chart the other day. ETF, that's working, as is the TLT. We have exited the TIP, basically in this day here. So we're going to stay out of this for a while. We'll see if 110 holds. But we did break the trend line. We did break support. That was enough for me to get out. I could possibly see this going back down to test kind of the 109 area. Let's take a look at the buck. We did put this up a while ago, I think last week, on a weekly chart, looking at playing the dollar long. We did break above this declining trend line here. Pretty tight stop on this. And again, that was part of the reason for the weakness today, was a strong dollar with the weak euro and all the uncertainty, obviously, in Greece. Some things that aren't working as well still, that have not been working. This is a weekly chart of the XLF. You can see that we set a break above here was a buy, a break below here was a sell. Let's take a look at this on a daily chart. Again, this is the XLF. I have yet to pull up a chart of the retail holders today, RTH. We'll take a look at that. But anyway, you can see it looks like this is heading lower. Maybe we'll catch some support. But I think if there's any type of bounce here, it will be sold. Transports are still working. This is a daily chart of the transports. It's good with a close basically about above 150. I would have a stop right around the 50-day moving average, just below these couple candles here in that 96.25 range. And that is basically it. So the overall trend right now, for the record, on the 20th of May 2011 is neutral to down. We'll see how next week plays out. We have yet to really break out of a trading range that we've been in since the third week of February. Thanks for listening to the radio show, checking out the blog, you guys. We'll see you next week. This is Doug McKay, antiwallstreetguy.com.